through what is gap insurance, an easy explanation of guaranteed asset protection and why it is important to you. So what is gap insurance? Well, simply put, gap insurance covers the difference between what the actual cash value of your vehicle is, which is the amount that your insurance company will pay, and the amount that you actually owe. It comes into play if the car is stolen or totaled, meaning damage to the point that the repair cost would be more than what the car is actually worth, and while you're still making payments on your auto loan. GAP picks up where your insurance company leaves off and pays for your vehicle in full along with whatever your deductible is, so your out-of-pocket cost is absolutely nothing. So why do I need it? Well, did you know that your vehicle loses as much as 30% of its value as soon as you drive it off the car dealership's lot? More than 82% of consumers who currently have a vehicle financed owe more on the vehicle than what it's worth. And with GAP insurance, you're covered in the event of a total loss due to fire, theft, vandalism, accident, flood, tornado, or hurricane. So what protection do I get? Well, GAP protection pays off the difference in what you owe and what the insurance company says is the actual cash value of your vehicle. With the open road lending GAP, you get protection up to 84 months, coverage for vehicles up to $100,000 in value, payment of negative equity up to $50,000, payment of your insurance deductible up to $1,000, and protection for your savings and your credit rating. Literally, with GAP protection, your car is paid in full, zero money out of your pocket. The insurance or the GAP protection takes care of that for you. So should I buy GAP? Well, most consumers don't realize that it takes nearly 60 months of payments before you begin to build equity in your vehicle. This chart on the right-hand side illustrates that very, very well. You see the number of months for your finance term along the top of the chart, 0, 12, 24, 36, etc. You see a typical balance starting at $25,000 on the left-hand side. And then you see the orange area in between is where you actually owe more on the car than what it's worth. So if you were to total the car and have a total loss anytime between really month 57, 58, you actually owe more on that car than what it's worth, and that is why GAP protection is very beneficial to you. So here's how it works again. You total your vehicle with a balance of $23,000. The actual cash value of that vehicle is $18,400, and you have a $1,000 deductible to your insurance company. So your insurance company says, okay, here's a check for $17,400. The problem is you owe $5,600 more than that to the lender. So instead of your credit being affected or you having to dig into your savings account to pay that difference, GAP insurance pays that difference of $5,600 and you owe zero out of your pocket. So don't take the risk. Make sure you're protected with guaranteed asset protection from Open Road Lending. Thank you.